What's going on, ladies and gentlemen? Happy holidays. Merry Christmas. It is the beautiful week here, at the end of the year, 2 weeks left. And, let's take a quick second to really reflect on our accomplishments, our downfalls, our setbacks, whatever, anything that made us strong, anything that gave us experience to hold on tight to our goals and dreams and success and failures. All right, because every little thing that happens in our life is a lesson. All right, guys, so I want you guys to take what anything that you can take away from me, that is that I wish every single one of you great. Okay, I wish every single one of you greatness, and yeah, happy new year and merry Christmas. I know you all spend it with your loved ones and your family members, and I know you will all have a wonderful time. So, with that being said, let's dive into the analysis. Subscribe to the channel, give me a thumbs up on this video, and don't forget that if you hit that bell icon, you'll be notified when I upload these videos every single day. So, the bad news right now is that the Santa Rally was over. I mean, it never arrived, right? We got faked out post Powell, and we all need to be met with resistance at the X wave. Now, well, let me be before we analyze the wave structure. Let me just continue with the train of thought that I had here. We saw a pretty aggressive rejection, okay, and now it appears to be making our final leg into the wave two. Now, this wave two here unfolded in a complex correction. All right. Before we were counting it in different types of forms because we were just anticipating that this was going to be the breakout. So this would have been A, B, and C, one, two, and then the third wave up. But it so happened that the rejection occurred, and then we ended up lower. So we have here W, X, and Y to the Y wave, A, B, C, right, to the X wave, and then another A, B, C down towards the C wave, of wave Y, of wave 2, where I will have a 50% retracement to a 618, okay, target for where we potentially could see a reversal coming into the markets. Now, it is likely that we are going to break December 3rd lows. That is going to confirm. If we break December 3rd lows, that will confirm this complex correction. All right. Now, the SPY, Qs, SMH, IWM, Dow all closed red. I mean, it was a pretty ugly tape out there. It was pretty sideways. I mean, towards the end of the day, we started ramping up higher. But if we dive into the 15-minute time frame, let me see where I have that count. Actually, I don't have that count here, but all right, we could do it together. So if we dive down to the 5-minute time frame, okay, the way I'm looking at this, guys, is that this is 1, 2, 3. We're up in 4, and then we're gonna make our final fifth wave. So this is what that would look like: 1, 2, 3, 4, and final fifth. All right, now you already know from my previous videos that wave 4 cannot go beyond the territory of wave 1. So if by any chance this wave 4 continues higher and invalidates this count, then perhaps the wave 2 has completed, but it will be unlikely. So we're going to label this right here as our wave count invalidation. Okay, just for us to keep our eyes open for this level, wave count invalidation. All right, so let's take a quick look at our fib levels. I know this is the 5-minute time frame, and we cannot really rely on the 5-minute time frame, as the patterns really do more of the overall count will be on the larger time frame. But given that we are trying to nitpick at this market here because it's giving us a headache, then the 38.2 to 23.6% retracement, 455, 454 should be our level of resistance. All right, unless we start gapping up higher and filling this gap here. All right, guys, so be careful for those levels. I mean, if you want to short here, make sure you have your stop right above the 38.2, or if this continues on higher, make sure your stop is just above or at or above wave 1 or wave count invalidation. I do anticipate heading lower, maybe lower than our targets here. If that's the case, let's go up to the 1-hour time frame, and let's take a quick look at our fib levels for the higher time frame in the minor degree wave 1. So that'll look like this. All right, if we take that retracement, so 38.2, if we put this on the side, we already know that we went beyond that point. So what is likely to happen is that we're going to retest. Oh, actually, that was it. Yeah, my bad, guys. Yeah, okay, never mind. I thought that was for, I didn't label it correctly there. But yeah, so the 50% to the 618 should be our targets for the higher degree wave count, and the minor degree, the blue count right here, okay? So W, X, Y, wave 2, and then into the new year, off we go. or likely that we start wrapping up next week or this week. I don't know. We'll see. I'm hoping that we see the next leg lower. I do want to see that. I'm anxious for this to happen because I'm tired already of this correction, and we need to start heading on higher. Over to the Qs. This is not the count. The Qs here are telling us the similar story. All right. So the Qs are, we completed the wave one here on November the 19th. WXY to the W wave, ABC to the X wave. All right, now we have AB, 1, 2, 3, 4, and then the final fifth. All right, the final fifth could come at 100% extension of W versus X. That is 369. Alternatively, if we take a retracement, rather, right, from the low to this high, all right, and we'll open up our targets here. Let's do the 618 because we're close to the 50%. We see, you already saw a little bounce there, but it is likely that we will head towards the equality, right, of W versus Y. And that's probably what's going to happen. So, and if that's the case, then the 50% is not our next target, but rather anything below or at, let's take a quick look here. The 618 and the 78.6, all right, which will be the the 100% extension of this minor degree, okay. And the W wave, the blue count, let me label this green because that is our intermediate count, and the intermediate count wave 1, wave 2, which come in at 618, 786. All right, guys, so keep those levels in mind. So I don't want to continue with this review and the rest of the charts as the Qs or the S&P and actually let's take a look at the IWM. Yeah, let's do that for a second here. IWM, not much has changed. All right, the counts are still relatively the same here. We are going to continue on lower. This is the likely case because we have 1, 2, 3, 4, and 5. All right, 5 waves in the makings. Okay, and if we were to get, actually let's hide this. If we're gonna get pretty technical, then we got to see equality, right? So wave 1 to wave 4. Actually, we already saw equality here. Okay, but then we blew past it. So in that case, what we end up doing is that we're going to take the wave 2 to the wave 3 over to the wave 4, and then have our measure move there to the 100%, likely to the 618 too. Let's open up the 786, the 618. All right, so we have these three zones. As you can see here, the 618 is serving as some level of support for the time being. We did break the low of wave 3 to confirm wave 5, so at any given point this thing could start turning around, but it is likely that IWM, the Dow, and SMH, they're all going to pair up with the Qs and SPY or S&P and the Nasdaq for everybody to start heading on higher thereafter. All right, guys, so I know there's a lot of fear out there with Omicron and whatnot, and also the something about the Build Back Better plan for there was some comments out there, and that also gave us a little bit of a pullback here. But listen, be patient. All right, there's no reason at this very moment to start trying to blow up an account. Sure, go long, just the time will come. All right, guys, be patient. Love you all. Take good care. Merry Christmas, Happy New Year, and I'll see you guys tomorrow. Take care. Bye.